Welcome back, everyone. It's been like around a month since our last meeting, and it's also the first meeting of 2022. So cool. Oh wait. Okay, I clicked the wrong button. All right. Okay. So disclaimer. You guys have seen this like a billion times, but the following references is only an opinion and is just for informational purposes. If you guys I guess, lose money, don't blame it on me, yeah. So, if you want that, please seek a licensed professional for that. But yeah, okay. Cool, so Josh, would you like to lead our icebreaker today?
Sure. So did anybody do something like fun over Christmas break that you want to share?
Yeah.
I built a PC.
Okay, nice. Charlie built a PC. Do you want to elaborate on that? Like, sex or no?
Along with the wires. So I'd say it was about like 1500.
Okay, that's not
Ryzen 5 5600X. Radeon 6600 XT. 16 gigabytes DDR4 3200 CL16 RAM. 512 gigabyte NVMe SSD. SATA SSD. 2 terabyte hard drive.
nice.
Something watt.
Oh, the house one. Okay, cool. Alright, yeah, thank you for sharing, Charlie. Would anyone else like to share what they did? Anything fun? Austin?
Unlike Charlie here, I built Legos.
Okay, nice. You built Legos. What did you build?
A Lamborghini.
A Lamborghini. How much was the set? Oh, 300 bucks? Dang. How long did it take you? Oh.
What?
Was it worth it?
Yeah.
Yeah. Nice. Sick. Okay. Is that it for you, Austin? Okay. Anyone else? Okay, yeah, so sorry, what's up? Nice, okay, so you went to Universal Studios. How was it? Oh, it was raining. Okay, that kind of sucked. But it was still, like, the stuff that was at least fun. I see. Okay. Anyone else would like to share? No? Okay, I guess I'll give mine. You see, I did a program over the winter break, and it was not fun. Okay, is it worth it? Probably not. But I stayed home like all day, and it was pretty painful. But yeah, that's basically what I did. And yeah, okay. So thank you everyone for participating in Icebreaker, and we will move on to the next slide. Okay, I messed up. All right, Charlie, take it away. Yeah, just use mine.
Alright, so if you want to check like your attendance and check if you've been correctly marked for attendance, you can use the QR code on the screen. If there are any issues, you can just ask any of the staff and we'll try to get your attendance fixed. And yeah, please do that.
Thank you, Charlie. Yeah, so can everyone just quickly take a quick scan of that QR code, make sure everything is correct. That way we know you were here when you were here and when you were not here. So yeah. And come up to me if you have any issues with that. We'll give it maybe another 15-20 seconds and we'll move on. Okay, cool. Alright, so we'll move on from that. Alright, so takeaways from last meeting. So some of this might be a little hard to remember, but essentially shorting a stock is betting against it, and you're betting that it will go down. Taking a long position is the opposite of that. And hedge funds are essentially just extremely wealthy organizations that try to make profit for investors. And the GameStop short squeeze was essentially a huge community gathering up in order to try to mess up all of the rich people, I guess you could say. and it led to many various consequences that we talked about last meeting. And also, shameless plug, if you guys weren't here last week, you should check out the YouTube channel. You know, we have all of our meetings up there, it's pretty interesting. Okay, cool. Let's see, who wants to, Austin, why don't you talk about the agenda?
Agenda. So, up first, we have market updates and terms to talk about. Second, we have bonds. Third, we have why do companies list stocks. And then fourth, we have our long-awaited paper trading.
Thank you, Austin. And yeah, along with that, we also have our new officers announcement. So yeah, stay tuned for that. Anyways, that's what you call foreshadowing. Okay. Alright, yeah, so first up, market update / terms. Alright, so today was very interesting. So a lot of these large indexes and a lot of these large companies were doing extremely well, specifically for today. However, in the next 2 slides, you will see that all this green hasn't really been reflecting what's actually been happening in the past couple weeks. Would anyone like to take a guess? Probably everyone knows this, but why is everything decreasing? Yep, COVID variant, and this has led, I think there was something about legislature, I'm not completely sure, but there was some large decision made and that ended up plummeting the market completely, and you'll see it in these next couple slides. And also on the right side, once again, those are all the sectors, and as you can see, consumer durables and electronic technology has been doing extremely well, and some of these on the bottom, not so much, so yeah. Okay, so this is a 1-month graph. As you can see, this is NASDAQ, and if you go back to this slide, it was up 1.4% today, but as you can see, yeah, that's not, yeah, so it has been decreasing, and as you can see, this bounce back right here was today. So this increase was just all of it was today, and as you can see, it's just taking a huge plummet. And if you go to S&P 500, same thing, you can see the same thing, except this is 5 days. And as you can see, there's like a steep drop off right there, and it's slowly been increasing back up. So yeah, just very important to understand that just because 1 day of market is doing good, doesn't necessarily reflect what's been happening the past couple of weeks or the past couple of months. So as you can see from that, so yeah. All right, now moving on to our terms. Dr., would you like to talk about mutual funds first?
Alright, a mutual fund is a professionally managed organization or program in which investors pool in their money in order for mutual funds to essentially invest for them, where they invest in a variety of stocks, bonds, or short-term debt.
Alright, thank you. Yeah, so just to elaborate on that, so essentially a bunch of these people who have money essentially pool in their money into mutual funds and just let the mutual funds do the work. And these fund managers essentially just buy in securities, which could be stocks, could be bonds, or could be short-term debt, to all try to make a profit for their investors. And we'll actually talk about bonds in our next section, so that's something I've been wanting to do in a while, and you guys will see what that means. Next, I'll cover this slide. So FANG. FANG is essentially an abbreviation for Facebook, Amazon, Apple, Netflix, and Google. Now, why is this? You guys have probably heard of this, yeah? Has anyone heard of this acronym? Yes? Okay, cool. So you guys may hear it a lot among like computer engineers or computer programmers because these are one of the largest, 5 of the largest, I guess, like tech companies in America, and as a result, they have a high demand for programmers, and they generally have a good reputation among like paying their work-life balance, all of that in these companies. So it's just something to really understand, and because they're probably not going to go away for a while. So that is FANG. Next, Metaverse would, let's see. Katie, do you want to talk about this one real quick?
Okay. Let me get up close so I can actually read this. So the metaverse, you may have heard the word meta or metaverse being thrown around frequently in the last couple months or so for a good reason. The metaverse is essentially a new internet that Meta, formerly Facebook, is trying to develop with the collaboration of other companies. Although this idea is very much still an idea, it has many pros and also many cons.
Alright, thank you, Katie. Yeah, so just to build up on that, Metaverse, a lot of you guys probably heard of it. Essentially, it's, like Katie said, a new internet, and it is still very much an idea. It has not been solidified at all. But another aspect of Metaverse is that they're going to implement a lot of virtual reality technology, which could be very detrimental and also very interesting at the same time. So it's definitely something to keep your eye on in the next couple years, next couple decades, and we might look back at this time to see like a turning point in technology. We'll see. We don't completely know yet, but yeah. So that is the metaverse. All right, next we will talk about bonds. So, what are bonds? Now, you guys have probably heard bond stocks a lot, and you guys, at least I hope you guys probably know what stocks are by this point. But what is a bond? So essentially, a bond is almost like a loan that you, I guess, borrowers take out and investors take in. And yeah, so just like the graphic says, think of them like loans. And there are many types of loans many types of bonds that we might talk about in later meetings. But for now, we're just going to give like a general definition and a little bit more of deep dive in there. So this is just a general definition for what a bond is. Alright, so continue. So essentially, think of it as an IOU deal. So investors or borrowers, they need money, whether that be for their companies or whatever other thing they want to do, right? How do they get this money? They borrow money. And why do these investors let them borrow their money? Well, that's because bonds have interest. So essentially, the investors are, I guess, banking on the fact that these people are not going to default on their loan, and as a result, they are going to make money through those interest rates. And there are also many types of, I guess, ratings of bonds. So some of them are more safe than others, and as a result, obviously, in a lot of things, the more riskier something is, the higher returns that it possibly can have. And bonds are also usually less volatile, which means that it's less likely to fluctuate versus stocks. So that might be something that interests a lot of, I guess, more passive, I guess, like people who play stocks, I guess. And yeah, so going back to the defaulting thing, so bonds actually have something called a maturity date, which is essentially where, I guess, the bond kind of expires, where you have to pay the borrower back of the principal amount, so the amount they took away originally. And usually, because of this is generally a safe option, but it is very likely that, well, not very likely, but it is a possibility that the borrower defaults on the loan, essentially meaning that they can't pay it back and you won't get your money back. And you might ask, well, why don't borrowers just always default on their loans? I mean, just getting free money, right? Well, not necessarily, because this is extremely bad for your credit score and leads to higher interest rates from other loans, which means they have to pay more money. And it's just not a good situation for either party in that case. So yeah, just something to really keep in mind about that. But yeah, all the other information obviously is on the slide there, and you can take a look at that. And also something that's also very interesting, the higher interest rates are in terms of like the general market, the less valuable a bond will be, and vice versa. So I'll keep that up for like another couple of seconds. Okay, cool. So now that we talked about bonds, let's talk about them versus stocks. So on the graphic there, you can see that for stocks, return is generally from dividend, which essentially means you're banking on the fact that the stock goes up, and you sell, and you make that profit from where you bought it and where you sold it. That is called a dividend. Now, a bond, on the other hand, is interest. So you essentially make money by hoping, or not hoping, but making sure that the borrower pays that money plus interest, and you make that money from interest. And return guarantee. So bonds, like I said before, they generally have a maturity date, which essentially means borrowers have to pay that amount by that specific date. And this can be couple months, couple years, maybe decades. So there are definitely a lot of fluctuation there. And additional benefit is that stocks give you, or when you have like a specific percentage of stocks, I guess, you essentially have like, you're buying part of a company, and that means you have voting rights in that company. And for bonds, you also get preferential treatment when a bond matures. So, and also the website is there if you want to go back to it once we send out the slides later on. Okay, next we will move on to why do companies even list stocks in the first place? Okay, there you go. All right. So generally companies list stock because they need capital. Okay. Does anyone want to provide a brief explanation on what capital is? Austin?
They want money.
Okay, yeah, that's the reason. What is capital? Like, what can it be? Obviously, it can be money. What else could it be?
Investors.
Not necessarily, no.
Privately owned businesses.
Okay, yep. It can also be assets, capital. So it can mean a lot of things. But essentially, if you think about a company, what do you need for a company to run? Just throw out words. What do they need? Okay, so if I just make a company right now, bam, I just start making money? No? Okay, what do I need to...
Products.
Okay, that's one expense, correct? You need money to buy or to produce that product. What else? Employees, publicity, there you go. Those are all expenses. And you also need a place for your company to locate, correct? You also have to ship out those products, right? So all of this is all expensive. Now, how do these companies get this money? Well, this is where listing stocks come in. So essentially, when a company lists their stock, they're essentially pulling in all of this money from investors, and they're generally, in terms of like a startup company, they're going to be pulling that money in order to make this company more successful. They're going to be paying their employees. They're going to be paying for various expenses, like I guess like land, assets, products, all of that. And continue. Yeah, so a startup, which is just a quick definition for, or a word for a new starting up company, they have two ways actually to utilize selling shares or borrowing money to get that money to pay for expenses. So debt financing, which is essentially borrowing money, is generally pretty risky. Remember when I talked about how it is an extremely bad thing to default on your loan? Well, this is the risk that startups run. So if they take out a loan and the company ends up failing, not only are the company failing, they can't pay back their loan, aka they have to default, aka even worse stuff. So what do they, I guess, resort to? They utilize selling shares. And therefore, the main reason that companies list stocks at first is to raise equity and capital to fund their endeavors. So that's very, very important to understand, because you may think, oh yeah, stocks, so cool, right? But like, why are these companies even doing it? Why are they giving us normal people, I guess, a chance to buy into their companies? Generally, when they're starting, at least, it is because they need that money to operate. And it's very, very interesting because it kind of, there's almost like a symbiotic relationship there. So, okay, now we'll move on to paper trading / closing. And yeah, so these are the new officers. So congratulations to Matthew for publications, and Gilbert and Alan for representatives. So Alan right now is not here because he's got COVID, but yeah, yeah, nice. All right, so if you guys could all message me your numbers and I will add you to the new group chat, that would be very beneficial. So yeah, congratulations guys. And also, all the officers now, including you three, please stay behind for a couple of minutes. I want to talk about some things before we leave. Yeah, so those are new officers. Now we move on to paper trading. And just give it a second while I get this up.
Smash it on the floor, get it over.
Okay, so this is our Halo trading, and let's check up on some of our stock picks from a couple months ago, or a month ago. So yeah, so let's see, we're actually down $3,000 right now. We're down 3.73%, but let's see why. All right, let's see why. What's been happening? Obviously, we've talked about how just the whole market's just been bad these last couple weeks, but let's see. So, looks like one of our main losses comes from Netflix, which actually dropped $100 since we last bought it, which is very interesting. So I think we probably bought it at a peak, and that's probably why. Not necessarily that Netflix is a bad company. Let's see. We also lost $600 from Nvidia, and the thing is, it's in Nvidia and a lot of those technology, or not a lot, but specifically Nvidia, they're pretty volatile. Especially because of the semiconductor shortage that we talked about a couple meetings ago. It can be a little off. So yeah, so we lost $600 there. And okay, yeah, so our major loss actually was from Bitcoin. So yeah, so we bought it at okay, so we only bought 0.1 of a Bitcoin, and we bought it at 67K, and now it is at 42K. So that is, I can't do math right now, $25,000 decrease in a single Bitcoin? Is that what it is? Yeah, go ahead. Yeah. Well, you see, this is paper trading, so like, if we lose this money, it doesn't really matter, which is why we're doing it. So we just wanted to buy it just to see. But yeah, so we probably similar to the Netflix thing. We probably just bought it at a super high price. But also about Bitcoin, this is something that's kind of scary about cryptocurrencies. It is extremely volatile, and it also has a lot of upside. Remember that thing about more risk equals larger return? Well, this is one of those times where we don't necessarily get the luck of the draw, I guess. So yeah, but other from that, let's see, we have a couple companies in the green actually. So we bought Lucid at 42, and now it's at 45, which means we gained about $300, pretty solid. Yeah, so we bought Tesla at right under $1,000. Right now it's hovering around that $1,000 range. So, and Apple, yeah, Apple up $3, Sony up $1, and Disney up $6. So yeah, very, very interesting. Yeah. Okay, cool. So now that we've kind of recapped all of that, let's buy some more stock, shall we? All right. Any recommendations? Anything? Any stocks to buy, or more of a stock that we already have?
Like anything.
Well, I want it to have like some kind of reasoning behind it, if possible. Yeah, Austin.
More Bitcoin.
More Bitcoin. Okay. Oh, would you? Okay, buy the dip. All right.
Maybe Cash App?
We're probably not gonna.
Use Cash App to like send money.
I mean, this is fake money, so it's not really working out. But okay, Austin, how much you think? Because we have 0.1 right now.
Another 0.1.
Another 0.1. Okay, yeah, we'll put that in right now. Why not? So now, yeah. Okay, this so many. Oh wait, I have to go. Hold on. Please hold as I figure out how to use this. Okay, cool. And another 0.1, and that should be. Oh wait, I messed up. Okay, so that'd be 4K, and preview and confirm. All right. Next, anything? Yes. Wells Fargo, why? Good choice. Yeah, so like you said, Wells Fargo is a banking company, and they do you know by chance what the symbol is? I'm not completely sure. Or okay, I can. Okay, Okay, all this is just in equities. Okay. Wait, do you know? Okay. Let's see if I can just. Oh, I think I found it. There we go. Okay, cool. How many? Yeah, so it's 56 right now, and we can maybe hover around like, let's see, we could do like probably 70 shares. How much would that be? Yeah, okay, so 70 shares at Wells Fargo, confirmed, done. Any other recommendations? Anything? Just have like reasoning behind it. Yeah. Intel, AMD, why?
Intel released Alder Lake, AMD is releasing 6,000.
Interesting. Okay, cool. Do you want to do both or just choose one? Both. Okay, then I'll probably do like 1.5. So let's see. Well, AMC, not AMC, AMD is an easy one. You can buy probably like that 10 shares is good. 1.3, confirm, and then Intel here, and we can probably buy 20 of this. Okay, cool. Anything else? Ethan.
Buy games.
Wait, is it publicly traded?
Huh?
Wait, okay. Why?
Because season 4 is coming out.
Their show?
What?
Their show, right? Like,
Yeah.
okay. Oh, okay. Oh, that's what you meant. Okay. Alright, I think, I'm not sure if they're publicly traded, which means that they might not list their stocks, but we'll see. Is this it? I'm not completely sure if this is it. No, it's not. Yeah, so Riot Games is actually not publicly traded, which means you can't buy the stocks. So yeah. Anyone else have recommendation? Ethan, yeah.
Roblox.
We already have Roblox, so wait, hold on. I'll check real quick actually, because I'm pretty sure we did have. Okay, no, that's not it. Open positions. Oh yeah, we do. Okay, yeah. So we actually lost $300 from Roblox. We paid 104 for it, and now it's at 89. So, yeah. But we'll keep an eye on it. All right, because I wanna have more stocks to play with since we have the amount of money left, fake money. Austin, yeah.
Berkshire Hathaway.
Oh, okay. I actually really like this. I don't think we have that much money. We're gonna have to buy like point something of it, but B or A? Cheaper one or rich boy one?
They're not any different, right? Same.
Not really, no. But obviously you get higher returns with because it's just more expensive. But
Alright.
is that A or B?
That's A.
Okay. Okay, I spelled it wrong. No, it's not that. Okay, here we go. And this is 3, yeah. Okay, actually, let's do it. Okay, yeah, so, again, you guys see that price? 400K. So, let's see. We might have to get, like, okay, we can't buy fractional shares for stocks, so we're just gonna. I'm sorry, we're gonna have to sell for B. I know, very sad, but all right. So 10 shares should be around 32. Okay, any more? We can do maybe 1 or 2 more, and then we'll wrap it up. If not, then that is the end of our paper trading. So as you can see, a lot of interesting results, and we'll be sure to check back in 2 weeks on that and on the orders. And now going back to our slides. So yeah, main takeaways. Our market is seeing a steady decline as a result of COVID-19. Yeah, and mutual funds utilize investors' money. FANG stands for Facebook, Amazon, Apple, Netflix, and Google. Metaverse could potentially be extremely huge, but we do not know yet because it is still an idea. Bonds are essentially loans given out, and they are generally lower risk, but also lower reward. And finally, companies go public and list their stocks in order to round up funds to, yeah. And, okay, and now we're gonna do the post-it note reflection stuff. So I actually brought post-it notes this time. So I will, Matthew, can you help me with this? Give one to everyone, yeah, and I'll pass out some too. So yeah, as you can see on the slide, just rate this meeting from 1 to 10. Please, if you can, I know it's kind of a small post-it note, but please try to write something I can improve on next time, and we'll definitely take your opinions into consideration. And after you've written that, please leave it on the desk, and you are all allowed to leave. Thank you everyone for coming. Officers and new officers, please make sure to stay back for a couple of minutes. I just want to talk about some things real quick. And yeah, and obviously check out all of our socials, please. And yeah, cool. Thank you everyone for coming, and we'll see you next time.